Good morning and welcome to the Killik & Co market update. Today is the last day for GKN shareholders to vote on a proposed bid from Melrose, and if this goes through, this will be the largest hostile takeover in the UK since Cadbury was taken over by Kraft nearly a decade ago. So the deadline for votes on this is midday today, so we're quite excited to see how this turns out. Now, GKN is a FTSE 100 engineering company with a very long history in Britain. And to give you an example, it made the cannonballs that were used against Napoleon, it produced the Spitfire planes that were used in the Second World War, and today it makes a lot of parts for planes and airplanes. Melrose is a turnaround specialist, so it acquires other companies, it tries to improve them, and then it sells them on, hopefully for a profit. And its mission statement is actually buy, improve, sell. And so far its track record has been very good, but so far it hasn't taken on anything quite so big as GKN. Now, the UK government is a bit concerned about this potential takeover. It hasn't blocked it because it wants to make it look as though the UK is open for business, but it has tried to impose a number of terms and conditions. For example, it is trying to encourage Melrose to keep a particular number of jobs in the UK. The response from GKN shareholders in the press has been quite mixed. Some have spoken out against the bid, but others have been quite frustrated with the weak performance of GKN over the last 5 years. So as you can see by this chart here, share price performance has been very weak, particularly bearing in mind that the wider stock market has performed quite well during this period. So as you can see, when the Melrose bid came in at the end of 2017, there was quite a big spike in the GKN share price. And I think a number of GKN shareholders will be thinking this could be quite a good opportunity to get out of the shares without taking a loss. So we'll have to see what happens after the vote closes at midday today. And looking at the wider stock market, it has been quite a disappointing year so far for the global stock market. So I've been looking at the FTSE All World, which is quite an all-encompassing global stock index, which looks at both developed and emerging markets. And as you can see, it did have quite a drop at the end of January when investors became quite concerned about potential interest rate rises and political tensions. And since then, the index has been quite volatile. And what we tend to do is compare stock indices to what's called their 200-day moving average, which, as it suggests, it just shows the average price over the last 200 days. And plotting a graph of this tends to give you a much smoother line than looking at the index itself. So it gives you a better idea of long-term trends. And it's quite common for technical analysts to compare this 200-day moving average on the same chart as the stock index itself. And if you compare the two, and if at any point the stock index itself crosses the 200-day moving average, that is taken as an indication of a long-term change in trend. And this week, actually, the stock index came very close to crossing its 200-day moving average. So that was a potential concern for some investors. If it had crossed the line, it would have perhaps signaled a downward trend in the markets. However, it did actually bounce upward off that level. So that was a relief to investors, but still something to keep a very close eye on over the coming days and weeks. And we have talked a fair amount recently about Saudi Arabia and how the country is really pushing to become less dependent on oil and how it's trying to become more open to more foreign investment. And this week, the country announced a huge collaboration with SoftBank of Japan. So they've said they will be working together until 2030 to create the world's largest solar power generation project. And over the next 12 years, they're going to be investing $200 billion. And to put into context how large a sum that is, Apple is currently the largest company on the stock exchange and is worth about $844 billion. So this $200 billion solar investment is worth nearly a quarter of that. So it's really a huge statement about the future of solar power. And it's hoped that over the 12 years of this project, about 100,000 jobs will be created. And when the project is finished, it's hoped that it will produce enough fuel to power 150 million homes. And to compare that to the UK, we only have about 27 million homes at the moment. So this really is an enormous project that says a lot about the future of solar power within the world. Moving on to the week ahead, it's going to be a fairly quiet week, only 4 days in which the market is open. We're just looking forward to one company reporting, and that's BTG on Tuesday. But other than that, we hope you have a great Easter, and we'll see you next Friday.